Okay, folks. Welcome back. Welcome to this uh, Zoom call, Zoom session. We talked much about working on different candlesticks. Today, I mean, uh, we didn't finish them. We were remaining. We were planning to also talk about um, for our candle for our candlesticks and how to approach them. You can use this when you are making re-entries, especially when you already have your daily bias. Make sure you have direction of your daily candle, and then work on using um, work on using 4-hour formation to find possible entry, maybe for trade continuation or when you are scalping. Everything we do is based on candlestick. So we do not accept to see a structure and you come use sell around here because you see the structure. We have to always start from candlestick formation. So if you are trading 4-hour candle, every time 4-hour candle opens, that should be your opportunity to see if it gives you the pattern you're looking for. If it doesn't give you what you're looking for, you have to avoid it. You have to avoid it because sometimes you are going to look for opportunity to sell using this structure, normal structure, and you are, for example, you have a seen imbalance. Maybe you are on a 15-minute. You are going to sell from there. Assuming this is imbalance, you are going to sell from there, and then market does what? Market goes higher, takes this high, trade into this balance, for example, or the block around here, or another block around here, and market goes down after you are being taken. But if you go to higher time frame, you realize that for our candle was forming around here, and it was trying to trade higher to a certain zone. So you are trying to buy to sell around here, while for our candle is trying to form manipulation to go down. So it's better to wait for candlestick open. For example, you may look for trade opportunity around here when in a currently running candlestick is closing on 4-hour. And when a new 4-hour candle start around here, when you are selling, it goes up to do what? To perform manipulation, to look for liquidity, and then it goes down. So it's better if you are trading, you take trade based on time. Maybe you can decide to trade after every 4-hour candlestick or every 1-hour candlestick, depending on the type of trader you are. That's it. This is what I want you to understand. I want you to understand. There will be so many opportunities you will see, and some of you have to remember, not every single candle is going to be traded, because some are very difficult to trade. Some are very difficult to trade. So what I want you to do what I want you to do, after every 4-hour candle opens, press your vertical line here, the middle, like this. Always follow this process. Those who were looking the posts I was sharing in the Telegram, you have seen why. So every time you see this 4-hour candle start, it will start small like this. For example, it will start a small candle, but you know at the end it will go down because you know where liquidity is and you have the whole direction. Because if you don't know where liquidity is, do not take a trade. Because the first question should be, where is the next draw or where is the next draw on liquidity? If you cannot see that, you do not have direction, please run away. Run away or switch to another pair. So your candlestick will start like this, you know, at the end, you can visualize that at the end, it will be like this, but it is starting like this. Sometimes it will start going higher. It will start going higher. It will start bullish. It will start as a bullish candle like this, trying to push higher like this. And then, since you have direction, and maybe you can check on 1 hour, you see maybe there is imbalance was created, or there is another block or something, any kind of key level you can see there. But what matters on a daily candle, when it is pushing higher, when I say daily candle, I mean you are trading within the daily candle, then you are working on 4-hour. What matters on daily candle is that you already have direction, and then you are working on a 4-hour candle to see how they are going to accomplish overall direction of their candlestick. So if they start bullish, for example, you have another bearish candle around here. You are in a trend. Market is trending down. This is a bearish candle. Market is trending down. Then this candle will be looking for something inside this candle. Maybe you can switch to 1 hour to see if there is imbalance within this candle, or there are time from another block like 1 hour or 30 minutes. Yeah, you can mark all of those, or you can use mitigation block. Most of the time, I use mitigation block. Example, if you have a buying zone and you have a sell zone going on, any bullish order block that was created here can support the price to go down on our time frame. So for our candle may decide to come and trade on this area and reject and goes down. Then what matters again, when you're working on a 4-hour candle, make sure you use 30-minute time frame. 30-minute time frame as your manipulation time frame. 30-minute as your manipulation time frame. Your manipulation time frame as 30-minute. If you understand. So meaning you'll be looking for an FU that will be formed as the price is going higher. To restart as bullish, this is 30-minute. This is the open price. Then you have a candle forming here. You have a candlestick forming here. then you see another candle trading higher on your key level, and try to reject. They can reject as bearish or as bullish activity FU. A bearish activity FU can be formed by a bullish candle. You have to understand sometimes. And you see something like this, for example, on your 4-hour time frame. On your 4-hour time frame. Remember, how time frame you are trading down. This is the open price of 4-hour candle. You are checking what is going on a 1-hour candle. So someone is asking, manipulation time frame is different from market maker. For our candle, it's not. It's different. This is much like how can I call it? Understand that this manipulation time frame, take it as your structure time frame, because you are working on this candle. You are working on one candle, this candle, right? Take it as your structure time frame, because after this 30 minutes, we will have a market maker time frame here, which is a 3 minute, from a 30 minute time frame to 3 minutes. So take it as, if you followed the previous video, I was telling you that this is what? This is a manipulation time frame or structure time frame. It's all the same. What matters, after identifying the structure you're looking for, switch to market maker time frame. After identifying this pattern, after identifying this pattern, this is a complete manipulation. Manipulation is nothing but turtle soup or a run on previous high, whatever you can call it. So make sure you do what? Some cars passing by. So make sure you see this on 4-hour, because there are two ways you can trade this. You can either look for a sell on the top, which is very high risky. What I recommend you is to wait for this to form and then prepare to sell the next 30 minutes. Because it is going to be bearish. So you are expecting something like this on a 30-minute time frame. This is what we are looking for. So after this, you're going to be bearish on a 30-minute like this. And you want to enter around this area. Of course, your stop loss will be above, because your true stop loss is going to be around here on the top. So you understand? Now, since you expect this to happen, when a new 30-minute candle start, I repeat one more time. When a new 30-minute candlestick start, put another vertical line here. I don't want you to forget this, because it will save you a big time. Once manipulation forms and the next 30-minute candle start, put a vertical line inside here, because it will save you. Because this helps you, when you change to 3 minutes, to identify the other block that was created before this candle start. I think I gave you an example in Telegram why you should do it. And I think I will go through it again. So after this, switch to, assume that a new candle start as bullish. Another candle start here as bullish. This is 30-minute candle. You know it will end up being bearish, but it will start as bullish. It will start as a bullish candle. Now switch to 3 minutes. To do what? To look for what? To look for the other block, the key level, which is another block we are looking for to confirm. The other block we are looking for is the other block that will have been created. The other block we'll be looking for, another block that will have been created around here. Around here. Someone asked Macon, so does that mean we need to find the key level or B integration block, etc., within the previous 4-hour candle on 14-minute time frame to catch the 14-minute bearish manipulation as the forms? I'll come back to this question later. I think I'm trying to understand what you ask. What I mean around here, first of all, for the process, what I mean around here, go to 3-minute time frame. On a 3-minute time frame, around here, of course, you will see many 3-minute candles that was created, bullish 3 minutes that was created around here. And look for that engulfing candle that was created around here. Bearish engulf. Bearish engulf that was created around here. So this bearish engulfing is your signal, and it will create another block around here. So this other block is the one that will be tested by another 14-minute candle, this 14-minute candle. So you might see, for example, a new candle, this one. For example, this vertical line is here, where the 14-minute candle is starting. This one. Assume it's here. And this is 14-minute candle. On a 3-minute candle that is starting. This is, for example, starting bullish or whatever. It is pushing higher. It's trading around here. This time, one price here, you can open your trade. You can open your trade. You can go short here. Right here. Stop loss is above here. This is high. The same as here. And then wait for price to either take you out or to give you the money you're looking for. If you are taken out, do not say it doesn't work. Simply understand that no strategy is going to give you 100% win rate. No strategy will do that for you. Take it. It doesn't work. Come back and repeat it and repeat it and repeat it. As long as you see it, approach it. Approach it as your strategy. Embrace it as yours. Embrace it as yours. So, hope you clearly understand this. So this is it. This is it. So this is the process. This can be applied when you are bullish or bearish. So always use timing when you are trading this. Another candles, like there are some candles in 4-hour. If you look at here, they open and drop immediately. Those are not your setups. 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 Those Those are not your setups. They open and drop immediately. Those are not your setups. You understand? Someone says on every 4-hour candle, we trade it. I said not every single 4-hour candle is going to give you that opportunity. No, no, no. What I'm saying is this. Every time you see 4-hour candle forming, we prepare ourselves to see if you get this opportunity, to see if you get this pattern. No. If you don't see it, we don't trade it. If we don't see it, we don't do what? We don't trade it. So you have to understand that. This, I'm showing this maybe because maybe you are a scalper, you want to scalp 4-hour candle, or maybe you want to take a lot of time of entry. So no matter who you are, you still need this type of entry, because this is what even when you're trading weekly candle, you can still apply this based on where you see price is. Hope you understand what I mean. So I'll give you examples on Euro USD. The one I was talking about. On Euro USD, the one I was talking about. So every concept we did about, or every concept we talked about in previous classes matters here. Price may be here and you have no idea why we have to drop down. Simply because we have one push, a pullback, another push, a pullback, another push, free cycle is complete, a post-pop pullback is coming. So that's something you have to remember. So I'm trying to explain why I was expecting this candlestick to go down and why I expecting that candlestick to go down. Next week, I'm bearish. I'm still bearish next week. So if we go to the open price of weekly candle and you go to daily time frame, you can see that after a run on liquidity, which is here, a certain pullback is coming around here. Now, price has traded into this imbalance that was left behind. And you see that? Now, we need to go down to look for this current imbalance. We are not here to think that price is going to go down. We are here to target the closest draw on liquidity, which is this imbalance. Then, on a daily time frame, engulfing candle was created around here. As your another block that may support the price to go down. Then you have another pullback coming. So on Monday, since we have inside the candle here, we wanted to see a form of manipulation. Actually, I want to see Monday creating the high of the week. Why? Because we are trading on the key level. Market is opening right on the key level. Market is opening right on the key level. So this is going to be a normal protraction. We'll talk about weekly profiles later. Now price was trading down. Then, even if I was expecting that, I didn't take any trade on Monday because I always open the chart on Tuesday. So Tuesday, I saw this on the block was also created around here. So I was expecting price to trade into it and then we go down. So here on 4 hour time frame, we traded on this area and then price traded lower. You can see the order flow. How the order flow was going. I'm trying to reach here to show you what was going. You know, I took a trade here, and I also took a trade around here when we were way down. This pullback, I also caught a trade around here. Then I'm showing you how to just see how price is moving. Basically, you will start seeing highs and lows being formed, but in a logical manner. You can see that. So if you see something like this forming, if you see something like this forming, not to get surprised. It's raining here, so if you hear some kind of sounds, so you have to bear with it. So around here, price, let's look at price action here. Based on structure, you know, I'll remove this. This candle, I put a vertical line here in this candle. Now, based on structure, you know what is going to happen. You know this inside the candle will be taken because we are going to create a pullback. If you check on 4 hour, you know that. You know that we move from external liquidity to internal liquidity. This is external liquidity, external range liquidity, and we head to internal liquidity, which is here. Which is here. And then where is the key level? This other block. The block is one of the greatest key level. This is your key level for this day. For this day. Now, if you mark, you may ask yourself, we talk about the daily candlestick and how to catch the high of it, like this. You may ask yourself, why didn't we see this 4-hour candle get manipulated? This will usually happen when market is immediately trading on the key level. The key level is a test. There is no way market is going to manipulate. So if you are hesitant, this time you have to wait and use your skills you have. Check on 15 minutes to see if you can see a signal. As you can see, new structures are being created, right? Are being created. If you are going to work on 4-hour candles, for example, you are going to look for opportunity in when these candles are going down. Use the same approach we have used. If it doesn't work the way we talked about, you can do what? You can, I don't know if you're hearing me, guys, because there are so many sounds around here. It's raining too much. So here, assuming I'm going to trade this candle, assume that I'm going to trade this candle, or I'm going to trade this candle. So look at the structure. You are on 4 hours. Try to see what do you have on it on 1 hour. What do you have on the 1 hour time frame, for example? On 1 hour time frame, what would support price? For example, this one, or this other block. See that? This is it. This is it. And then build the market profile uh, against build your 4-hour candle profile based on what? Based on structure in the key level you want. So if you are asking, can you use 1 hour or 40 minutes? Use, when we are looking for structure, we don't skip anything. If you are in a 4 hour and you want to see structure, go to 1 hour. We skip one time frame when we are working on it with a market maker time frame. Basically, it's not one time frame. So I'm seeing other blocks that may support the price to go down, regardless where price is. I'm seeing this engulfing candle that can push my next 4 hour to go down, which may push my next 4 hour candlestick to go down like this. So if you're going to trade this candle, you have to look left. This candle, this bearish order block is the one that will act as a key level. If you're going to trade this candle, remember this vertical line shows you the open price of 4-hour candle. Now, since you have marked your key levels, for example, you may mark your key levels like this. Let's start from here. And you are going to trade this 4-hour candle, this open. There is a vertical lines here. I hope you can see them. These ones. This marks the open of the 4-hour candle. Then you go to 40 minutes. 40 minutes. You see that? In 40 minutes, what do you see? You mark the first candle you have here. That is started 4-hour. This is the first 40-minute candle. This 40-minute candle was not manipulated because the high was broken with the body. You have to ignore that. Once the next candle breaks previous candle, it doesn't reject it, you do not have your setup. Instead, mark the next one like this. And this applies even on a daily time frame. When you are working, for example, on weekly manipulation. If one daily candle is broken, you mark the high of the next candle that is formed in the way to be manipulated. Because if a high is broken, that means you are still bullish. Understand that. That means we are still bullish. Now, here, a new candle start on the 40 minutes. It traded down, manipulated the bottom, and went higher and rejected, manipulating the top. Which this is what we call self-negation. Self-negation is what? You have anti-FU that is formed on downside, and then price goes up and then creates another anti-FU on the upside. It creates another bearish anti-FU. You see? Anti-FU to go up. When it goes up, it rejects, it creates another anti-FU. So this anti-FU is going against this one. This is what we call self-negation. This one is negating this one. It's like here, institutions are saying, we are bullish. Let's go higher. But once they reach this point, they say, no, let's change our direction. Now let's go down. So they are negating their previous idea. So that's why someone asks, is negation, what is the difference between negation and anti-FU? They are all the same. Negation simply means we are negating our previous idea we have on the bottom. We are bullish. Now we changed our mind. On the same candle, we are going down. So this is what we call negation. Now, since you have seen this, the next process, the next 30-minute candle is going to go down. Bring your vertical line, I told you. Bring your vertical line. You can even change the color of it so that you don't get confused. I'm making it blue. This candle is going to be bearish. Now, what you're going to look for here, you are going to look for 3-minute order block. Switch to 3-minute. Switch to 3-minute to check what is going on, to see if you can get engulfing candle. Now, try to see how the structure is now. Anti-FU negation. Imagine if you're going to trade this area and you didn't see that. You do not get any idea of what is going to happen. You will be thinking this is the high, this is the low, this is the high. You will be thinking this is the low, this is the high, this is the low, and you think you are going to go higher. No, you've got a signal here because you've got another block here that purge the liquidity here. You can see that. This is another block. This candle that was engulfed. This is your signal. Now the new candle is trying to test it. The new candle is trying to test it. During this test, you open your setup and you go short. You go short, stop loss above. You can make it 4 pips. And you are taking a trade you truly understand that follows the process. If it takes you out, no problem. A new 4-hour candle is coming. If it takes you out, no problem, because a new 4-hour candle is coming. Hope you get the idea. This is it. This is what we're looking for. Right? The power of vertical lines, do not forget it. You need to use vertical line every time you're going to trade a certain candle.